From an India standpoint, I would like to say that the India economic momentum continues to be very good. We expect a very strong momentum this year as well. On the back of that, the steel demand in India is very strong. Last quarter, it grew at 14.9% on the back of 13% last year as well. So the demand in India is very strong. However, the international scenario was weak. The demand as well as the prices were muted. We reoriented our sales to the domestic market, and with that, we could able to do our volumes, while our production was slightly lower because of some maintenance shutdowns which were planned. Our sales were better. We were able to liquidate inventory. Going forward, we expect the cost to go down further because the coking coal prices and iron ore prices are coming down, and that would flow into support the margin. The shutdowns have been completed. The operations from our existing facilities will ramp up. And the new facilities which are coming on stream, we are commissioning the 5 million ton additional facilities at our South Works and another 1.5 million tons at our East Works. These will come on stream in this quarter and will ramp up in H2. That should give us better volume. So good demand in India, better volumes from our capacities should improve the demand going forward, should improve our EBITDA going forward.
In the statement accompanying the earnings, Mr. Acharya, the company did mention that government spending is anticipated to go up, and we are waiting details from the budget, as also private capex is expected to pick up. How much of that would induce confidence in the overall environment for a steel business, for a steel maker such as yourself?
Very much. I think the government is expected in this budget to support or continue to focus on the infrastructure spend, both the physical and digital and social. We expect manufacturing and energy transition to be focused on. And there would be some focus on improving the consumption and welfare across the country at large. Infrastructure and manufacturing is very positive for the steel demand, and therefore the steel demand, as I said, would continue to be robust in this year as well. India is a multi-decadal story, and I think what is good is because steel is a long-term kind of an asset. The way we see it, the next decade or so would be very good for India, and therefore we are ramping our capacities up to 50 million tons by the end of this decade. This year end, we should be somewhere around 35 to 36 million tons as we close this financial year. And we are very hopeful that the budget is going to be supportive for the steel industry at large.
Jayant, very good morning to you. Thanks for joining us today. I'm curious to get your thoughts on any of your concerns perhaps around the Chinese overcapacity story in this space, because we are seeing reports suggesting Chinese steelmakers are exporting a lot of their products because they're not able to offload it at home given the weak domestic situation. So how much of an impact is that having on prices? Because I do see that that is perhaps going to prompt some of these other countries to maybe think about more anti-dumping probes on China to try to perhaps control some of those prices as well.
No, that's a very key concern for us as well. China has excess capacities across various sectors, and steel is one of them. The rest of the world not being as economically positive as India. India is vulnerable to trade flows or trade diversions into India, and that's what we are seeing as Chinese exports are going up. We do expect that seeing that the kind of variable or below the variable costs, the way the Chinese steel producers are operating, we do expect that appropriate trade measures would be initiated by the governments, as has been done in the other countries at large. While we work on that side, we are continuing to see what we can do on our side to improve our cost position, and various initiatives have been taken to reduce the cost. But we will continue to work on trade measures because India is vulnerable because it's one of the highest demand countries in the world today.